Good evening, one and all. I'm Epstein, and here we are with your SPDR ETF stock market wrap-up. And this wrap-up is for Thursday evening, the 21st of November, 2024. Before we get too far, let's look at what news we had for the day. You're going to get tomorrow morning the S&P Global Group coming out with their manufacturing and service sector PMI numbers. That's at 8:45 in the morning, Central Time. And then at 9, we're going to get the University of Michigan final November sentiment indices. They'll be coming out. You, of course, get earnings reports, and obviously the big earnings report yesterday was Nvidia, where the market at one point was down about 5% in pre-market trade. When we finally opened up, we were sort of flat. And by the end of the day, well, Nvidia came back and surprised traders and actually closed higher. Amazon got hit pretty hard. The chart action just isn't good on Amazon right here. Google getting hit, you know, the antitrust that they're going after them on. So we've got to pay close attention to all that's taking place there. I still like uranium. I still think it's looking very positive here. I heard Ken Griffin really likes it from Citadel. So that's, you know, you're getting the big boys taking a look at it. Gold came back up. But it was stock indices where the big story was today, because they really performed and performed well. So now we can take a look and see just what's going to happen with the markets, maybe. All right. When we look at the daily chart of the S&P, we still have these gaps, but the market's acting like it doesn't want to fill them on this round. It's filled instead the gap here. See that? Now the question is, can it build on it and get through these highs to make the new highs? So this is a very, very important round that we're in right now. If you come back and take out these lows, you're probably going to go down and fill the gap here. So you're at a crucial point. I think the pros are buying right now. And I think they're looking for the liftoff in the market, as we've talked. You know that I've been saying I thought the market was going to base out against that 18-day average and try to make its move. Well, until you get back under the lows of Tuesday, I think that that's in place, and you could make that move and maybe even go for the Bollinger top. Right now it's around the 606 level, and you're overbought. Now, overbought doesn't tell me that you should deploy new money in the market. That's the problem. The chart action's good. It's got to resolve and either embed or do something else. QQQ today was the spot that I ran to, I don't mind telling you. In LYV, ever since we began covering this, all it's done is rally. And that wasn't my goal. My goal was I was hoping it would back off so you can get involved in it. So I'm going to drop it shortly and pick up something else, which tells me if you want me to cover a couple of things for you, maybe stuff that we haven't covered, well, let me know. Write me on the YouTube. I'm going to be doing tomorrow. I got to pick one chart for the new week, and let's see what you come up with. In CrowdStrike, bullish. It just doesn't back off in the market. Rivian fighting this big battle at the 18-day average. The bears are still in control as you have lower highs, lower lows, but you're very oversold. You either embed and say you're going back to this level, or if you start getting over these highs right through here, be careful. The market can all of a sudden pop on you, get back to that 1137 level. It's got a lot of work to do to clear these moving averages out. So I'm not seeing that happening right away. In K-Web, we've had a short covering rally off an oversold condition. Okay, is the market, was it ever embedded? Let's take a look. Nope, I can tell you that just by looking at it. Didn't do it. So you have a market that's just correcting an oversold condition, which is healthy, but I don't see a trend change per se. In Toll Brothers, the market certainly stuck its head up, tried to be really good, but by the end of the day, it had given up most of the gains and settled in the bottom part of the day's range. It's hard for it to go anywhere when we still see interest rates marching higher. That is the problem that you're dealing with. Home builders, a little better chart action than Toll Brothers, actually. Now you got lower low and a higher high. So you're out of the downtrend, but you're not in an uptrend. I can't say that at all. The financial services, as long as you have an embedded reading, thumbs up. You're looking to be a buyer on breaks, in my opinion, trying to come out at higher levels until that reading is lost. In XLI, the materials, this now came down to the zone that excites me. This was the break in a market that kept its overall bullishness, corrected an overbought condition here, and is now fighting to establish itself against the 18-day average of closes. On the energy sector, yes, this performed better than a lot of the markets today. You know, the first thing, of course, that you know is this isn't the oil. These are the oil people that make the money. A little different, the refineries and so on. USO is the oil. Gold. I thought when I woke up and heard an ICBM, remember I wake up early, I'm going, why is gold only up this little bit, $20 on that? I would have really thought $100 an ounce. So I questioned, is it real right from the beginning? Market reactions tell you a lot. So you've rallied in the gold back to the 18-day average of closes. You've corrected half the break or so that you've had. Now it's got to tell us what it is, and it hasn't done it yet. Silver's still acting weaker than gold. It's finding support at the 100-day average, but it's not saying, hey, get up and go and let's get silver and own it. And the same in copper. A lot of resistance over this market, and copper doesn't look to me like it wants to go anywhere one way or the other. So you put it all together. What do you do with bonds and notes? TLT, still acting bearish. All they did is rally back up to the 18-day average, corrected an oversold condition. How far can we go in everything if interest rates keep going up is the question. And here's your bull. So it's stocks in this, the dollar, it's not overbought, it's embedded, still looking good, which gets me real bearish the euro. So you either want to own the dollar or you want to own the euro, which way, and I'm talking short the euro or long the dollar on this type of formation. I'm Ira Epstein. I want to remind you that if you want to join me in the morning, the fun is in the Spider ETFs. At 9 in the morning, I start recording my video. I always let the first 30 minutes of trade go by so that the market adjusts to the pre-evening trade, the night trade, as you know. That's not included in the day's ranges, by the way. And the money gets moved around, and that's when everything starts. Plus, we get a lot of reports that come out between 7:30 in the morning and 9 o'clock, so I like that to happen. So you're going to be educated. You're going to see charts that come in and look in a whole different way. I think you're going to love the special reports like the one I hope you just watched in the S&Ps that we did, or the stock indices for you, the SPY. Take a look. All you need to do is go to iraepstein.com. Go to the word research. Everything you want is right there. You can move your cursor to the top up here. It'll take you there as well. And I'll catch up with you all in the morning. Take care.